Hi, everyone. Welcome to our show for March 9th, 2015. Today we will be talking about the 76th weekly report from Timing Research. My name is David Kosmeter. I'm the creator of Timing Research. And if you haven't seen this report yet, just go to TimingResearch.com/reports. And I have Dave Landry here guest hosting for me again. So I'm going to turn it over to him.
Okay, thank you, David Kosmeter, and thank you to Timing Research for having me back once again. Jared, let's go to you first. I'm sorry, Jared. Next up. Cameron, let's go to you first. Tell us a little bit about yourself and tell us a little bit about DimensionTrader.com.
Yeah, hi, David. Thanks for having me on here as a panelist.
Good to have you back. Glad to see you.
Always fun to be here. Well, I'm an old trader from years back. Had my Series 7 back in the 70s. Actually, I was trading penny stocks in the Denver market, but have been in and out of the market. Doing different things. Now I no longer a broker, but I do trade futures and options. Both of those I enjoy trading, and I work with a company called Dimension Trader, DimensionTrader.com. It is a company that's created over 40 proprietary indicators. They've got several very unique trading systems that are indicator driven, but they're for the futures market, for scalpers that love to trade, that love to scalp. The Dimension Trader software, really, I don't think there's anything better out there. And that's who I am.
Cool, good stuff. All right, Jared, let's go to you next. Let's tell us a little bit about yourself, your trading, and tell us a little bit about TradingConceptsInc.com.
Sure. I appreciate you having me on. This is my first time, as you know, and I'm looking forward to it. Trading Concepts is a company that teaches proprietary day trade and swing trade approaches, and I started out as a student back in 2006. And then since then, Todd Mitchell's the founder and CEO of Trading Concepts. He and I have done various projects over the years, and currently I am heading up the Trading Concepts one-on-one coaching program. And so what we do is we spend time getting to know the goals and aspirations of an individual one-on-one, and then we implement the various aspects of what Trading Concepts offers to fit their needs, to fit their goals, and to help them move forward.
Cool. Good stuff. All right, next up we got John Nyaradi of WallStreetSectorSelector.com. John, tell us a little bit about yourself, your trading. John's a friend of the show, so good to have you back. And tell us a little bit about your trading and yourself at WallStreetSectorSelector.com.
Hey, thanks, Dave. Always great to be here. Great to see you. And it doesn't look like you put on any weight eating all the pasta in Italy there.
Oh, I did. Trust me.
Wall Street Sector Selector, we're about ETFs. We specialize in exchange traded fund and sector rotation kind of trading. We watch the major sectors. We do standard ETFs, leverage ETFs. I'm developing an options program and trading education program. So that's our thing. I write a lot, all kind of different places, USA Today, MarketWatch.com. I wrote a book about sector rotation, sector selection.
Cool.
And so that's who we are.
Cool. Do you guys do anything with delta relative strength, meaning the change in the relative strength as opposed to like a ranking? I'm just kind of curious about that.
Yeah, that's one of the ways you can pick up which sectors are coming into prominence. So you want to see which ones are moving up and which ones are moving down. That tells you a lot about it. It's kind of looking under the hood of the market, what's going on underneath.
I'm a big fan of that type of research, so good stuff. Okay, Cameron, let's go to you first. Based on any technical or fundamental indicators you want to use. Well, first of all, I'm Dave Landry, DaveLandry.com. If you're interested in me, you can go to my website and get a bio, and I've got a lot of good information there, and I'll sum that up at the end. Cameron, let's go to you first. Based on any technical fundamental indicators you want to use, would you predict the S&P 500 index will move higher or lower by the close of Friday, and that's March 13th, Friday the 13th? And then once you give us your prediction, on a scale of 0 to 10, rate your confidence, with 0 being no confidence and 10 being extremely confident.
Higher.
Okay.
And my confidence is going to be 6.5 today.
6.5. Okay, kind of middle of the road. Okay, and we'll get to the next question. We'll let you flesh out that, unless you want to do it now, but we'll get to the next question. We'll let you flesh out that prediction in a little more detail. All right, let's go to Jared. And Jared, based on any technical or fundamental indicators you want to use, would you predict the S&P 500 index will move higher or lower by the close of March the 13th on Friday? And once you give us your answer, rate your confidence on a scale of 0 to 10, with 0 being no confidence and 10 being extremely confident.
I am going to say that between now and the close on Friday, I think we're going to be lower, and I would rate that an 8.
Okay. Okay, obviously, next up is going to be John. John, based on any technical fundamental indicators you want to use, would you predict the S&P 500 index will move higher or lower by the close of Friday the 13th? And rate your confidence on a scale from 0 to 10.
Well, Friday the 13th, it's got to be lower, right? It's going to be. But no, that's my view. We're in cash and some inverse short ETFs. So
oh, wow.
It goes.
Wow. So you really put your money where your mouth is.
Yeah. Got to give it a 10,
I
guess, yeah.
Wow.
Money's on the line. Yeah, money's on the line, so it's got to be a 10, right?
You're the, this is the first, I've been doing these shows, I forget how many months, but Dave's had me on for a few months, David Cosbitter, and I think this is the first 10, so this will be fun to watch.
Yeah,
well, I'm going to go ahead.
This one I remember.
Yeah, thank you, David. I'm going to go ahead and say higher. I'm a trend guy. NASDAQ's looking pretty good. What's got me frustrated about the S&P 500, and I'll flesh this out a little bit more when we get to the next question, but I'm frustrated that we dropped back into the range, and as of Friday, we are where we were way back in November of 2014, so that's a bit of a bummer. As a trend guy, I can't stand a range-bound market. It makes me nuts. I get every night we get options guys on here, and they get all excited about a range-bound market, and that just kind of makes me angry. But but it's hard for a trend follower to catch a trend where there is none. So hopefully we'll get back out of the range. But I'm going to go higher, and I'm going to give that a confidence of about 7. And I'm just sticking with the longer-term trend. I think longer-term, I think the market generally will continue in the direction of its longer-term trend, whether that's up or down. And I think for now we're still in an uptrend. So I'm going to continue to say up until proven otherwise, until I get some sort of transitional pattern. And I'll talk a little bit about that in just 1 second. Cameron, let's go to you next. Based on what developing events, and they can be technical or fundamental, would you be watching out for this week that might have a positive or negative impact on the S&P 500?
Well, looking at the news is what I'm going to be looking at this week, because I think that's going to have a potential impact, but it's not until the end of the week. We got Thursday, we got retail sales, and what else is on Thursday? Unemployment. Those are two biggies, and I think that's certainly going to impact.
Well, retail's in a serious trend, so that should be interesting to see what's going to happen to that, huh?
Yeah, it really is. It really is. And then Friday we got a wholesale price. The producer price index is out. So towards the end of the week we're going to see a lot of this, but a lot of news, let's put it. And I really think that's going to be relatively favorable. I think. But you never know how this market's going to react. And I get a kick out of the fact that anytime that it looks like the Fed might raise interest rates, like Friday, what we had there, that sell-off. I mean, it's not like interest rates are going to go to 5% overnight.
Yeah.
They're going to creep very, very slow when that time does come. And I don't know. I always feel the market's overreacting.
No, I hear you. I think the knee-jerk in bonds, which I'll talk about in just a second, I think the knee-jerk in bonds is a little scary, but provided it stops sooner or later, I think we'll be okay. But we'll get to that. Okay. Anything else you're keeping an eye on, Jared? I'm sorry, Cameron.
No. That's it right now.
Okay. All right, Jared, let's go to you. What developing events, and they can be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
On the fundamental side, one thing that I think could be a bit of a surprise item might be the news from China this week, industrial production news scheduled for Wednesday, early hours New York time before the open. I think that could bring on a surprise uh, in terms of possibly jolting the market. And I almost envision just perhaps a jolt down and then perhaps good news from the United States to bring things back in the upward direction before the close on Friday. I don't think we'll be higher overall, though. And then on the technical side, I am just looking at a couple different things. One is the amount of transactions that we had between December, over the month of December and January between 1980 and 2040. I think the market might come down and test that support. Like I said, though, I don't know how long we'll spend time down there. I think that there'll be some good news to bring things higher off of those lows, but not necessarily higher than where we are now.
Cool. Okay, John, let's go to you. What developing events, and they can be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Technically, as Jared said, the pretty heavy support level right here, the 50-day moving average, the EMA, we're right on that, the 50-day exponential. So we look to see if that holds or not. Fundamentally, all kinds of things. I think are the world market's going to buy into the European Central Bank quantitative easing or not? And that remains to be seen because, as you mentioned earlier, it's been all about the Fed. It's still all about the Fed. If people stop believing in the Feds of the world or the central banks, then it's a new world we're in. So those are the two main things I'll be looking at this week.
Cool. Okay, you cut out for a second. You had anything else to add to that? I don't know whether you were finished or not because you cut out. Okay.
Yeah.
I'm a 100% technical trader. I'm glad you mentioned the 50-day moving average. I always forget about the 50-day moving average, and then whenever the market begins to crack a little bit, I remember to put it back in, or somebody reminds me. And that 50-day moving average is in the middle of the range, a little bit towards the top of the range. I think it's worth watching because everyone watches it. I am, like I said, I'm not concerned about the news. It's a reaction to the news. It's a big deal, not the news in and of itself. And lately, this market has reacted fairly well to negative news. It'll have a little hit down, then it goes right back up. The S&P 500, we are back in the range, as I said a second ago. That's really a bummer to me as a trend guy. But if you take a look at the NASDAQ, and I'll just pull it up real quick. NASDAQ's looking pretty good. We have a nice persistent breakout in the NASDAQ. Now, one thing that I like is when you have a bit of a knockout move. And we had a little bit of that on Friday. I'd almost like to see a tiny bit more. I call it a trend knockout. Market begins to sell off from brand new highs, and then the Chicken Littles of the world start fear-mongering, and the weekends get shaken out, and then the shorts start piling on. And then if the market turns around, it could actually clear the way to go higher because the predicament of all those traders getting knocked out. So if anyone's interested in a trend knockout pattern, I'll be happy to email you the pattern. I think it's also under education on my website. One thing that has to be concerned, I've been watching quite a bit. If you look at most sectors, they're looking really good, and especially technology. Semiconductors look good, retail looks good, drugs look good, biotech. There's quite a few tech sectors looking great. But obviously, rates have had a bit of a knee-jerk lower. They're selling off out of a pattern I call a first thrust and also a bow tie. And when those two patterns happen, either one after the market's coming off of multi-year highs, I think it pays to pay attention because the most amount of people are the wrong side of the market. So it's not the absolute rates, and I think who mentioned it earlier? I think Cameron mentioned earlier, like rates aren't going to go to 5% overnight. But what's scary is it looks like it at the moment because they're dropping like a stone. So I think it's very important for rates to stabilize because the market has completely ignored the slide in rates up until Friday. And then obviously the interest rate sensitive areas such as the real estate and utilities, those areas have gotten hit really hard lately. So hopefully other areas don't follow suit on that. All right, Cam, let's go back to you. Question of the week is AT&T has been part of the Dow Jones Industrial Average for almost 100 years. but will soon be replaced with Apple. Do you think this will be beneficial for Apple's share price? What company on the Dow 30 do you think should be replaced next?
Yeah. I'm not even sure I can tell you what the Dow 30 are, all of them.
Yeah, I'm looking them up right now, literally.
Which one needs to be replaced next? But as far as Apple being on there, I really don't think they did Apple shareholders any favor by making it one of the Dow stocks. One of the talking heads last week was saying, and they spent the time to look back, and I guess that when companies come onto the Dow, their performance is actually blunted a little bit. So I don't know, if that's true. It may slow Apple's upside, potential as it continues to go. It might have moved a little faster if it stayed on the Nasdaq. So it might dampen the volatility a little bit. We may see it just a little softer, I would say. But all in all, I guess the bottom line is I don't think they did Apple shareholders any favors by going onto the Dow or by being one of the Dow members. Is my feeling.
Well, how does that actually hurt them?
Well, yeah, I don't really know. I mean, the Nasdaq's more exciting, and people tend to go in there and you expect things to be moving around a lot. Obviously, what makes stocks move is buyers and sellers, and who's where at any given time. But and that's not going to stop with Apple being on the Dow, obviously. But I just found it interesting. If history holds true, most stocks that move to the Dow are dampened a little bit, and that's what I heard. I didn't verify that. I'm just taking that as,
Well, I'm a big fan of trading inefficient markets, and I'm wondering if when you become part of an index like that, does your stock become more efficient because you're going to get a volume increase and there's more people fighting it out, and then derivatives are connected through. I mean, I don't know, but maybe that's what it is. If I had to maybe guess something, do you have any stock you think should be replaced?
No, not at this point. I'm not a Dow fan anyway. I tend to say, the real market is the S&P. I think it's bigger.
Yeah, I like looking at the one of my favorite indices is the Russell 2000. Is good to look at too. I find. Okay, Jared. Let's go to you. AT&T is coming out of the Dow. Apple's going in. AT&T's been in there for 100 years, but Apple's going to come in and replace it. You think this is going to be beneficial for Apple's share price? And what company on the Dow 30 should be replaced next?
As far as what company replace, I don't have an answer. I don't have one on the tip of my tongue, or even one that I haven't researched. I don't really have an answer. As far as Apple goes, I think that Apple gets the benefit of the doubt often, and so I think in this case, with it becoming part of the Dow, in the minds of some, it might become even further legitimized as a decent investment. And so I think there might be a bit of an upward drift in the price. I think that might just spark a little extra demand. Overall, though, I agree with what Cameron and you were saying a moment ago as far as the future movement may become a little bit more of a slow mover, a crawling kind of move, not the roaring days that we see on the Nasdaq.
Yeah. John, let's go to you. AT&T's been part of Dow for 100 years. Apple's coming in. Do you think this will be beneficial for Apple's share price? And then what company would you like to see replaced next?
Well, I think this whole Apple thing, in a bigger picture, is really fascinating. You've got the biggest company in the world, the most popular with the hedge funds, all the institutions are in it. It drives the whole world, and if you look at Apple versus AT&T, it's just so symbolic of the changing times we're in. I'm old enough to remember when AT&T owned the world. They were Apple. You couldn't make a phone call that was on AT&T.
I'm embarrassed enough to admit that too. Getting up there too.
So it's such a just a metaphor for the world we live in. You either change or die, and Apple is living and AT&T is dying. So I think you take that big picture first of all, and that's a fascinating time. And as investors, you have to see who's dying and who's growing. And I think so that's very indicative. So I think that's the kind of the big picture I've got on it. As far as Apple itself, as Cameron mentioned, historically, I read a couple of same articles. You come into the Dow, your stock goes down over the next some period of time. The leaving stock tends to go up. So one idea was you short Apple and you go long AT&T. That's interesting. Another idea was Apple has more cash than AT&T's entire market value. That's a fascinating story. And of course, Apple's like bigger than some economies, right, in the world. If they were a country, they'd be one of the bigger countries around. So
a while back they were like 30% of the Nasdaq 100, and then they cut them back to like 18%, and then they went back up to 30%. Just kind of crazy.
Right. And then I think the thing about Apple is it's such a, how do I say, behemoth. It's such a huge force here. I was reading about it in the S&P. It's part of the S&P, of course, as well. If you took Apple out of the S&P earnings, they would decline like by 1.5%. 2 point something would be 1 point something. So it's going to be a big impact. I mean, in the long run, probably not good for Apple, I would say, in the longer run. But they're so bulletproof. Who knows? As far as which companies to get rid of, I just pulled up a list of the Dow, and I'm like everybody else. I'm not a big Dow watcher, but I mean there are a lot of people in here you could get rid of. Microsoft is going to be either irrelevant or change and grow. The same thing, adapt or die. And Walmart, the company everybody loves to hate. I don't even want to get into Walmart because we're subsidizing them as taxpayers, with the food stamps and all that stuff. But anyway, so
Gotcha.
that'd be my view. That'd be my view.
Gotcha. Well, I don't have a big opinion on it one way or the other. Apple, like the rest of us here, I don't really worry about the Dow that much, and that's pretty much universal with most traders. We tend to focus on the S&P and other indices out there. It's irrelevant to me. As far as who should leave, I don't know. It doesn't really matter. It just seems like the only thing that a couple things. One, Apple's like a cult stock. It's just amazing that people love it so much for some reason, and they can't do any wrong. And one day that's going to end. I don't know why, like you guys were saying, you read some articles about how the Dow actually hurts the performance, but it can be, from what I've seen, like Microsoft, I think it was kind of like the nail in the coffin, at least for a while. It's like once something gets that big and moves that long and it's such a great momentum area, by the time they get around to putting it into the Dow, it seems like that's kind of like the fat lady's not singing, but she's kind of warming up. So maybe that'll kind of dovetail in with maybe that's why these stocks go down, is because they pick them so late in the game. And as for, again, I don't really have an opinion on what should be replaced. I mean, maybe get rid of one of the energy stocks, Exxon or Chevron. Throw a dart, take your pick. So, okay. Let's go back to you, Cameron. Do you have any closing thoughts on the markets? Anything else you want to tell us about your trading or DimensionTrader.com? And the floor is yours. So anything you want to say?
Oh, I appreciate that. I think we've covered our subjects pretty good. It's going to be an interesting week. There's no question about that. We'll watch and see. No, I just encourage everybody to go to DimensionTrader.com. We've got one of our trading programs called the Easy Trader. Is featured 3 times a week, and you can sign up for the Easy Trader training room, sign up for a guest pass, and spend a week in there, and you can see how Easy Trader is signaling entries and exits with no uncertainty. So that's DimensionTrader.com. You'll find the little link there to sign up for the guest pass in the lower left-hand corner of the home page.
Cool. All right, Jared, you're up next. Anything else you want to tell us about yourself, your trading, the markets, anything else we talked about today, or TradingConceptsInc.com?
I would say just to whoever's listening, always watch your risk first. Just a friendly reminder.
Amen. Amen.
Yeah, and aside from that, I don't really have a whole lot of predictions or anything. And then I always just tell folks whenever I'm in a meeting, if your trading isn't moving forward the way you want it to, and you need some help, and maybe you just want to talk to somebody, you can pick a phone and call me. You can email me. I'm not sure if my information's already out somewhere posted, or if I need to post that. But just if anyone would like to talk about how to move your trading forward, maybe give me a call. Maybe I could help, or maybe I can send you to someone that can help you.
Okay, cool. Good stuff. All right, John, any closing thoughts? Anything you want to tell us about trading sectors, how bearish you are, or WallStreetSectorSelector.com?
Yeah, I think we're in a treacherous. We're overbought, overloved, some weaker kind of internals. P ratios are at high levels, highest since the dot-com bust. Fed's backing out of the market. So fundamentally, I think it's a treacherous time, which is fine for traders, as we know, because we don't care if it's going up or down. I think that's what gives the advantage. Long-only people have more to worry about than we do. And so I think there are always going to be opportunities ahead here in the short term and going forward. Best way to get to know us is we have a free newsletter. You can sign up for that at the website. And it has we have this indicator, red flag, green flag, or yellow flag, depending on what we think is going on. We just switched to red flag status, so that's our high alert status. So you can kind of keep track of that and get to know us a little better that way.
Cool.
You are 100% certain here, John, today.
That's right. Yeah, we need to have John on next week and beat him up.
Yeah, just beat up on me, right? Exactly.
But if he nails it, we might have to start listening to him.
Well, I'd like to say just about this crowdsourced idea. I love these shows because it's like that old parable. Everybody's at the elephant. One guy feels the trunk and it's the hose. And the other guy's got the body and it's the wall, and the other guy's holding the leg. It's a tree. We all look at this thing in different ways, and the crowdsource idea is a good idea. And in fact, I think they've done some studies that proves that this crowdsourcing investment kind of theory actually outperforms professional manager.
Cool. Yeah, good stuff. Yeah, I love these shows. I always tend to learn something while I'm here, and that's why I keep coming back. One of the main reasons. If anybody's interested, my stuff is very simple. It's fully disclosed. I have a lot of educational materials that are free, and I have a YouTube channel too, Dave Landry. I'm sorry, YouTube.com/C/Dave Landry. I do answer all my own emails. My email is dave@davelandry.com. And I have a free newsletter. If you go to my website, at the bottom of the website, there's a sign-up form, so check that out. And I do a daily blog on my website, too, and that's part of the newsletter. One other thing, I do a weekly webinar, and any other appearances that I may have, whether in person or on online or on the countdown timers on my website. So a few minutes after the show, if Dave's going to have me back, I'll go ahead and reset it, and you'll have the link to join up for next week's webinar here for next week's panel. That's all I have to say. Again, Dave@DaveLandry.com. If you got any questions, David, back to you.
All right. Thanks, guys. Just want to remind everyone who's watching to go to TimingResearch.com/reports if you want to download the current or any former or past reports. Be sure to go to TimingResearch.com/current survey to fill out the survey this coming weekend for the next report. And I just want to thank my guest, Jared Putnam of TradingConceptsInc.com. Thanks for being here for the first time.
Appreciate it.
And Cameron Yost of DimensionTrader.com and John Nyaradi of WallStreetSectorSelector.com. Thanks for being here again. And Dave Landry, as always, thanks for guest hosting again.
Thanks for having me back.
That's it. Thanks, guys.
Have a good week.
Thank you, too.
Thanks, everybody.
Bye.